Yo, what's going on, everybody? It's Thursday, October 12th. Tomorrow's Friday the 13th. So, I told you, folks, market's going to be heading down. We're going to have some volatility. There's a bunch of things. I'm trying to be very clinical about this. I'm trying to be very non-emotional, as you know, that's the way I conduct my analysis. I'm not jumping on headlines. I'm not like, oh my God, and when there's some external event, a geopolitical thing like the war going on, I still try to focus on the economic stuff. You can't predict when something is outside of, the realm of the concrete data that you could see the numbers every single day. Like something like a war is very unpredictable. That could be like one of these black swan events where it could go in any direction. We don't know. So to sit here and try to speculate on what's going to happen, it just drains a lot of energy. I stay focused on the data. And I sent out today, this morning, we had the inflation report, a core CPI up 0.3%, a little bit. That was what the forecast was. The initial reaction was a pop higher, but I sent out an email. It's again, folks, why you need to subscribe to the report MMT Trader, because I sent out an email saying, there is risk in this market right now. Not risk in the big long-term picture, but right here in the immediate sense, there is risk in this market. First of all, the fiscal flows this month, like I talked about this yesterday, the fiscal flows this month, the net transfers, that's the deficit this month, it's something like 36 billion. We was something like around 76 or near 80 billion at this time last month. So it has basically been cut in half. That's the net transfers to the non-government, to the economy. So that has slowed down. So that was number one that I mentioned as a negative factor. Number two, I looked at the AAII weekly sentiment survey, and we had a big jump up. This is interesting. We had a big jump up in bullish sentiment. And again, that is this monetarist zombie behavior that we got a couple of positive, let's say call them positive or dovish comments coming out of some Fed officials, and right away everybody, because everyone's a monetarist, jumps into that. They got excited. Bullish sentiment jumped up. I said in my email, be careful with that pop in bullish sentiment. Okay, it jumped up pretty significantly. All right, and bearish sentiment dropped down. Neutral, it's like practically no neutral. So everybody now jumped into the bullish camp. So that was another kind of, just from a market sentiment perspective, that was another red flag or a cautionary flag for me. The other thing is what I've been talking about, and this is again is kind of funny, is that it's the monetarist zombies, how they chase after anything that has to do with monetary policy. And it's just, they just keep getting chopped up. I talked about last Friday, or the week before last Friday, when they bought on that weaker than expected PCE number. Then the market tanked. Then last Friday, they sold on the very strong jobs number, and then the market went up. And today, they bought on that, it was kind of like a relief number that it wasn't, the CPI wasn't worse than what the forecast was. They bought on that, and then the market went down. So the lesson here, it's not even so much a lesson of monetarist zombies, although that is a separate lesson, and it's a lesson that I talk about frequently here on the channel, but the lesson is about behavior in general. I always tell people, don't chase, never chase, and never think that you see a headline or something like that and you could just jump in because you're the only one who sees that, and you have some kind of advantage over everybody else. That's just ludicrous. That's ridiculous. But never ever chase. Okay, you want to get your price at your level, and if it don't, you know what I equate it to? I equate it to fishing. If you like fishing, I love fishing. So what do you do when you go fishing? You got your rod, you got your hook, you got your bait, you bait up the hook, you cast it out, and then you sit there and you wait. Maybe you cast a few lines out, all right? If you get something, great. If you don't get something, you come back the next day or the next week or the next time you have an opportunity to go fishing. If you try to swim out there and catch a fish, chasing after it, you're never going to get it, or you're going to drown. Okay? It's about patience. It's about getting your spot. It's about getting your spot when the conditions are right. And you don't want to run after things. I call this the monetarist zombie FOMO reaction. FOMO, F-O-M-O. We all know that means fear of missing out. All right? So we had that going on today. And again, I just want to repeat, that's why you got to have the subscription, because I send out these things real time. I had people today, Mike, thank you very much. Thank you very much. I had a guy saying I was just about to do the FOMO reaction myself, and your email helped me to hold back and not do it, not chase. So that's great. The other thing I want to talk about is, and this, I started thinking about this yesterday, because again, this has to do with emotion and the lack of self-control, the lack of, being present in your state of mind, having control over your thoughts and your emotions. Very, very important. Back in 2018, this was like in December of 2018, if those of you who were in the market at that time, or maybe even were following my channel or whatever, it was a period where the Fed was still raising interest rates. Remember, Janet Yellen, when she was the Fed chair back in 2015, she started raising rates in December of 2015. It was like the first time in 8 years or something like that the Fed started raising rates. And they raised and they raised and they raised. And by the time December 18th, Powell had already come in. I forget when he came in, but Powell was running the Fed at that time. And the market was going down on these rate hikes because, again, that was the monetarist zombie reaction. We all know this. And at the time, I was sending out my report saying, you got to buy into this. You got to buy into this. Okay, the market, I think the S&P, and I don't remember off the top of my head, but this is close to what I'm talking about. The S&P went from like 2,500, there was like a 15% decline. So what was that? Like a 2,500 to like 2,200 or something like that. At the time, that was a big, 15%. A lot of people freak out over that. I don't, but a lot of people freak out over that. I had one guy who was a subscriber. I won't say his name. I don't even remember his name, really, honestly. I just know that his last name started with a Z. It must suck if your last name starts with a Z, because when you're a kid growing up, you're always going to be the last. On the first day of school, when they read out the list of names, you're going to be the last one to get called, right? But anyway, his last name started with a Z. And he was a subscriber, and the market was coming down, and I had some buy levels in the S&P, and it went through those buy levels. But I'm a macro fundamental trader, so I always say, don't overextend yourself. We don't know how far emotion can carry things on the way down or the way up, but the important thing is to always do the right thing. And the right thing is when conditions dictate, you do what you have to do. And if the market is coming down and conditions are improving, which again, the fiscal conditions, this is exactly what happened last in October 2022, when I called the bottom and I said, fiscal is turning around. We reached the inflection point where the negative impact, the bearish impact from the rate hikes is now being offset by the fiscal transfers. I was saying that. Okay? So back then, and this guy was livid, and every day he was sending me these, angry emails several times a day. How could you say to buy and it went through that point? How could you say to buy and it went through? So, and I don't know how far it went through that point. Like I didn't say buy at 2,500. I maybe said buy at, I don't know, 23.50, and it went to like 22 or something. Maybe I even said buy at 24. I don't know. All I know is when it was coming down and conditions started to improve, I said you got to buy. And when I say that, I usually say you got to scale down. You don't throw everything into it at that moment. As it's coming down. And this guy was livid, and he was sending me and calling me every name in the book, the worst analyst, I don't know what I'm doing. Where's the market today, folks? And that's even with the correction we had. That's even with the COVID pandemic. That's even with 11 interest rate increases. Well, we at 4,300 or something on the S&P. So pretty much almost doubled. And this is what I'm talking about. Like, you have to have some self-control. And if, a few percentage points against you is going to, kick you out of the game or put you in a state of mind where you are so emotionally twisted that you can't see straight, and then laying blame on somebody who's literally trying to help you, which is what I try to do with all of you guys. I mean, you're never gonna, that's never ever gonna work out for you. That is never ever gonna work out for you. You have to control your emotions. You have to control your emotions. And, if you get all bent out of shape because the market doesn't do exactly what you want it to do at an exact pinpoint number, then you're absolutely just deluding yourself. I don't know what kind of fantasy, bizarro dream world you're living in, but this is not the game for you. This is not the game for you. The only absolute precision you can ever have, and you're not going to have it, and I'm not going to have it, we are never going to have it, it's those guys who front run the orders, who see. I had it a long time ago when I used to be a floor trader. I had connections like that where I knew, like a friend of mine who worked for a big oil company when I was a NYMEX trader, he'd call me up quietly, Mike, go buy 100 contracts because I'm coming in after that. Like, okay, that's a pinpoint absolute, but first of all, that's kind of like cheating, okay? Although it wasn't really illegal back in the day. Eventually the exchanges made it not illegal, but you couldn't do it. You weren't supposed to do it. People still did it. And we have, there are laws on the books with the SEC about trading on insider information, but these algo traders who literally, you look at Citadel, this guy, Ken Griffin, he's a multi-billionaire hedge fund guy. How is he a hedge fund guy? Because he cheats the system. He buys the order flow from these big brokerage firms like Schwab and TD Ameritrade and his company, Citadel. I mean, they see the orders coming down the pipe. And by the pipe, I mean, literally the fiber optic lines that are connected to the New York Stock Exchange. They put their servers right there at the New York Stock Exchange. So they have maybe a 0.000 something nanosecond of an advantage over everybody else. But, that's pinpoint accuracy, but that's cheating. Do we have to do it? Is that necessary? Seriously. I mean, these guys invest millions and millions and millions of dollars. They're not making more money than Warren Buffett, who's just basically a value investor. I mean, if you scale what we're doing, I don't have that size capital to work with, but if you scale what we do based on our understanding of the macro and the flows, we're way, way, way more profitable than these guys. Like way fucking more profitable than these guys. So do you really need to do it? I mean, and they gotta have coders and you know, software and computers next to the exchanges and fiber optics and this and that for like to make fractions of a fraction of a fraction. I mean, is it really worth it? I don't think so. I don't know about you. I don't think so. I mean, it's a huge, huge investment for like meager returns. Okay? So, what's the moral of the story here? There's two things. First of all, control your emotions at all times. Don't get flipped out like Mr. Z over here that I was talking about, okay? Who looks like an idiot. Who he was calling an idiot and a fool back then when I'm telling him to buy at 2,300 on the S&P and now it's at 4,300. Who's the idiot and the fool? Okay? I ask you. So control your emotions. All right? And don't think you have to get this kind of absolute pinpoint, like people say timing is that. No, it's not. Timing is not everything. Time is something. Time itself. Because time you could never get back. And you could basically become wealthy if you start young enough and just by the compounding of interest. And this is why I wish they teach this in schools. But timing, this idea that, and this, there goes another chopper. This idea that timing is everything, that's the worst, one of the worst phrases that was ever put out there that people believe in. Because it makes you think that unless you get the absolute timing right, you're never going to make it. And that is just so, so wrong. Time itself is important. But timing, no. That's probably one of the least important. I mean, you could have fantastic timing and still fuck it up if your behavior's not right. And you could have the worst timing in the world, okay? Like who was it? One of the Rothschilds once said, I always get in too early and get out too soon. That was a famous quote by one of the Rothschilds. And that's like, they're like the richest, supposedly the richest family or dynasty ever. I always get in too early and I always sell too soon. Absolutely right. Nothing says it better than that. So stop with that. I know a lot of you people with your charts, it's got to be right here. If it's not right here. No, it doesn't. Hey, right here. It doesn't have to be right here. It has to be right here. For sure. But it doesn't have to be right here. So give up on that stuff. And remember the lesson of Mr. Z. See everybody tomorrow. Bye.